Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the numbers that shape our world and sometimes expose a few hidden truths. Today we are diving into some distribution news from New Mountain Net Lease Trust. Now normally we dig deep into the financial reports, but today this is more like a quick cash payout announcement which can tell us something about how a company is doing and how it treats its investors. Stay tuned because there might be more than meets the eye even with these seemingly simple payouts. And before we dive in, if you like getting these clear, no jargon breakdowns of corporate news, make sure you are subscribed and hit that notification bell. We also have a growing community over on Discord, so check out the link in the description below. So New Mountain Net Lease Trust, a company that invests in properties and then leases them out to tenants, has just declared its distributions for its common shares. Think of distributions as a way for companies to share their profits with their shareholders. It is like a dividend, but for certain types of companies and trusts. The company is telling us what it plans to pay out to its investors, and for every single class of its common shares, the payout is the same. This is quite interesting. Usually different share classes might have different rights or different payout structures, but here it is a flat rate across the board. Let us look at the numbers for each class of shares, Class I, Class F, Class A, and Class E. The gross distribution is $0.1336 per S-share. That means before any small fees are taken out, this is the amount the company intends to pay out from its earnings. Now, the shareholder servicing fee is $0. This is a positive sign. It means the company is not taking a cut for managing these distributions, which is always good for the investor. So the net distribution, the amount that actually lands in the shareholder's pocket, is also $0.1336 per S-share for all share classes. These distributions are for shareholders who own the stock as of the close of business on the 28th of November 2025. So if you own shares on that day, you are entitled to this payout. And when will you get it? The company expects to pay these out on or about the 8th of December 2025, so a little over a week after the record date. And here is a key detail that investors can appreciate. These distributions will be paid out either in cash, or you can choose to reinvest them back into buying more shares of the company. This reinvestment option is great for long-term investors who want to compound their returns without having to manually buy more shares. It is like setting your returns on autopilot for growth. Now, what does this really mean for New Mountain Net Lease Trust? Let us put on our Warren Buffett hat for a moment. This report is a Form 8K, which is a report of a material event that a company listed on the stock exchange has to file. Here, the material event is simply the declaration of these distributions. It is not a deep financial statement like a 10Q or 10K, which would give us a rundown of their assets, liabilities, revenues, and profits. This is a focused announcement about how they are distributing cash to shareholders. The fact that they are declaring distributions is generally a good sign. It implies that the company has sufficient cash flow from its operations to make these payouts. For a net lease trust specifically, this means their tenants are paying their rent on time and in full. Net lease means the tenants are responsible for many of the operating expenses of the property like taxes, insurance, and maintenance. So if the tenants are paying, the trust has less to worry about from an operational perspective and can focus on collecting rent and distributing profits. The consistency of the distribution amount across all share classes is also noteworthy. While it could simply be a policy, it is worth noting if this is a new development or a continuation of a trend. Without access to the full financial statements, we cannot definitively say how this distribution stacks up against their overall profitability or their cash reserves. However, for a company whose core business is generating lease income, distributing that income to shareholders is a fundamental part of their business model. Consider this a signal of stability and operational predictability. For investors in companies like New Mountain Net Lease Trust, consistency in distributions is often a major draw. They are looking for a steady stream of income. So while 0.1336 per S-share might not sound like a lot, when you own thousands or millions of shares, it adds up. And with no fees being deducted, what you see is what you get. The fact that they are an emerging growth company, as indicated by the checkmark here, is also something to keep in mind. Emerging growth companies often have more flexibility in reporting standards, but they are also typically earlier in their life cycle. This means their growth trajectory and potential for future distributions are key factors for investors to consider. This filing is essentially a Regulation FD disclosure. Regulation Fair Disclosure is about ensuring all investors have access to the same material information at the same time. By filing this 8K, the company is making sure that everyone from the largest institutional investor to the smallest retail investor hears about these distribution decisions simultaneously. So in conclusion, what is our take on this filing? It is a straightforward announcement of a distribution. It signals that New Mountain Net Lease Trust is generating enough income from its leased properties to comfortably share profits with its shareholders. The zero servicing fee is a bonus. For investors, this is a sign of continued income from their investment. However, remember this is just one piece of the puzzle. To get a full picture of the company's financial health and future prospects, you would want to look at their more comprehensive financial filings, like their quarterly and annual reports, which would detail their property portfolio debt levels, occupancy rates, and overall profitability. But as a quick update on how they are treating their investors, this is a positive and transparent move. It is a steady drip of income for those who hold the shares. What are your thoughts on these distributions? Do you own shares in New Mountain Net Lease Trust or similar companies? Let us know your experiences in the comments below. If you found this breakdown helpful, please give this video a thumbs up, it really helps us out. And of course, subscribe for more corporate insights. Don't forget to join our Discord community linked in the description. Thanks for watching, and we will see you in the next one.